Welcome back to my channel. It's been a little bit since my last video. It's only really been a couple days, at least from what you guys are going to see. But I had some good news. I am one of the lucky people who got some of my student loans refunded. And this kind of put me in a weird position because you had a couple things you can do with that. I mean, you think about it. I got about a little bit less than $7,000. So that money, I could put a down payment on a car. I could go out buy a whole assortment of things. You go on a quick vacation. You could buy your wife a new ring. You could go buy a shopping spree. So many different things. But I chose to be responsible, and instead I put it into my brokerage account. Now I'm going to do a slight shift to what these videos are going to be. Originally, just kind of talking about my stock portfolio and things like that. But what I really want to focus on, and what I think people will actually get some value out of, is understanding how much dividends you can actually get from a smaller portfolio. Like a lot of people's portfolios are like 40K, $1 million, 500K, 40K. It's just like almost insurmountable numbers early on when you're first starting out. It seems almost impossible to ever get there, especially if you've messed with dividends in the past, and you'll see how you're only getting $5, $10 at a time a month. Yes, over, 10 months, that $10 all of a sudden is $100 and things like that. But $100 trying to get to 40K, it's going to take a long time. So that's what I want to do. So I have a $7,000 account as it is. But now with basically getting another 7,000, as you can see, we're actually at $14,000, which I would say is a little bit beyond what people can get in general. But you know what we're going to do? We're going to start off this account, or start off this first video kind of talking about what we had previously. As you can see, this money is just in cash. It's not actually in the account. So anything that I show basically is what I had before. So let's just start by looking at the top three in my account. Or we'll go top four, right? We got Medical Properties Trust, which is at the time of this video is $8.93. I'm up $205.49. And this actually makes up 23% of my account. So a pretty sizable chunk. Medical Properties Trust is something I'm using as a long-term play. They give out great dividends. Their price is actually down. As you can see, this is the 52-week range. The low is 710 and the high is 1736. So if it doesn't even get up to 17, let's say it gets up to 10, 12, 13, 14, I'm making tons of money. And the main thing that leads me to believe this may happen is the reasons it's down. And the main reason is there's really two. One, there's a lawsuit going on. Some of the people are trying to sue them because of how hard the price fell. Others, or the other reason that it's down, is they have a end user, or a company that's not paying their bills. So that is one of the concerns, is as a company that is a REIT, they basically get all their money by people paying their leases and paying their rent. So they have one of their main customers not doing that. That's a big deal. But they came to an agreement, and one of those things that's kind of like moving forward, this is what we're going to do. So there's a little bit more sentiment, and Medical Properties Trust overall has gone up quite a bit. It is starting to slowly creep down. It was in the nines, I believe, like a day or two ago. Matter of fact, let's bring it up here real quick. It's MPW, Medical Properties Trust. All right, so you can see back in March, really, I would say really January, but March is kind of when things just really tanked. I believe I got in at around 750, something like that, and we got up to about 920, 930, but now you can see it's kind of slowly dipping. But the really cool thing to me is, other than this little drop here, it's been mostly up. There's a little bit of down, a little bit down, and it just keeps bouncing up. So like I said, I see this as a long-term play. And if it can just get up to, let's see, where was it? March. So 3 months ago, it was at almost $11. Well, 10.50. If you can just get up halfway Going to make a ton of money. Now, the other good thing, good or bad, depending on how you look at it, is the dividends. You can see they're basically showing a 12.73% dividend, which is very high. The previous dividend was 29 cents, and it just paid out. It's 6:21 right now. No, 6:15. It just paid out, or the record date it hasn't actually paid out yet. It's going to pay out on 7/13, and it pays out quarterly. So if you miss this round, you almost might as well just wait unless you think the price is going to go up right now. All right, now let's go back to, I would say, one of everyone's favorite stocks right now, and that is TSLY. So basically, anyone that knows about them, they are basically taking advantage of Tesla's current run up. As you can see, this one's also up for me pretty big, $316. I have 110 shares. Similar to the first one, I'm able to use options on this because I have over 100 shares. And as you can see, this makes up 12% of my portfolio as it currently is. So let's check them out. TSLY, $16.83 currently, and the high was 21.76 over the last 52 weeks. And I'm not sure this has even been around a full year. I think it's only been around a few months. But anyway, the low has been 12.53. So it's kind of in the middle. It's not at the top, it's not at the bottom, but they're doing what they're going to do. And luckily, as long as Tesla is going up, they should be able to capitalize. Unfortunately, because of the type of fund it is, they can't capitalize on the full amount that Tesla does. They are capped, I believe, at 15%. But assuming Tesla doesn't go above 15% growth, they should be fine. And Tesla's been on a tear as of late. So you kind of got to believe maybe it's going to stop at some point. And even if it doesn't, if you're into this, you're going to get out some good dividends. So let's check this out. TSLY. Over in here. All right, so you can kind of see the map here, and I'm not going to bring up Tesla, but their chart looks very similar to this. Um, got basically as low as about $12. I wasn't in then. I got in when it was about 14, 15, and it's gone up about $1. Nothing too crazy there. But the special thing about this one is 100% the dividends. You see this most recent dividend, 80 cents, aka 80 cents per share you had. So I had 100 shares. You can do the math on that. And that's just one payout. They've been paying out monthly. So, just looking at here, 90 cents, 82 cents, 44 cents, 80 cents again. So even just off of these 4 months here, you're basically looking at like $2.50. Like you're doing pretty good off of 16. So you can see here that basically if it truly paid out in this same scenario, you're going to get about 60% ROI year one. Not even multiple years, just year one. You'll almost be 60 to 70% if it continues to pay out where it is. But that's going to be 100% reliant on what Tesla does overall, because I believe this is basically the only position they have, and they don't even have the actual stock. They're doing a synthetic option. So some fun there for you. But check that out. Okay. Now let's look at, I said I'm going to do the top four. So let's go back here. We're going to go to Mo, which I believe is my third biggest position. MO. So Mo is also known as Altria Group. They're basically known as, hate to say it, but the cigarette company. I believe they're paying out 8% dividends. I'll be able to check that on the next screen. And that's the main reason I got in there. As you can see, my cost basis was $524. So I put a pretty decent chunk in here. This is one of my earlier stocks that I tried to get into when I first was trying to start this account. Only have 11 shares. It didn't go crazy. And overall, I'm down. I'm down $21 here. But that being said, when you're just looking at pretty stable stock. I believe this is one of them. So let me check this out. So this goes from January to here. A high I'm showing about 48 and a low at what 43. And let's even go back a year. I'm just curious here. See, this is what I'm talking about. Even if you're looking at it from a year standpoint, the highs and the lows, $40, 47. This is a pretty solid stock. It basically is just going to the right. And I'm not a big fan of the cigarette aspect of it, but they kind of seem to have a little bit of a monopoly as of a lot of regulations and things like that. Because cigarettes are heavily regulated, and Juul and some of these other companies that are trying to kind of get into that space, they're having trouble getting past the regulations. And I'm guessing Mo's probably paying all the right people, so they're able to kind of stay ahead of it. Let's check out this dividend real quick. So as you can see, 8.65%. So 8%. Now if you mess with dividends, getting 2 and 3% is normally good. This is 4 times that. So you could put 4 times um or a fourth of the amount into another stock and still get the same one out of this one, because you're getting 8%. So this one does pay out quarterly. It also just had its record date on the 15th. So next month, going to get a payout from this one as well. All right, let's go to number 4, and then we're going to do basically the quick roundup just to kind of show where we are as an overall position. So my fourth biggest is JEPQ. A lot of people know JEPP with the I at the end. This is JEPQ. And the main difference is JEP with the I is very similar to like a QYLD, where they're basically doing covered calls on the whole portfolio, whereas JEPQ save some of it. I believe they save about half of their position and actually try to get some growth out of it. So JEPQ, generally speaking, is able to maintain its price while giving out some dividends at a much higher rate than um, JEPB, whereas JEPB should give you more money but not be able to sustain its price as well. So currently, I only have 8.2 of this particular one, which is still $346, still nothing to balk at. But it's not giving me like a huge amount of money because I don't have enough in it as it is. So let's go check out JEPQ really quick here. So as you can see, this is kind of what I meant. As you can see here, so we were at $40, and this, to a point, this actually kind of looks like Ultra Group when you think about it, where it's kind of in that same range. But the difference is Ultra Group kind of bounced. The lows and the highs were all very similar. This does go down occasionally, and then it goes up, and then it goes down a little bit, and then it goes even higher, then it goes down a little bit, it goes even higher. So this is one of those things that, looking back at this a couple years from now, might see like, I don't know, maybe $100 or something like that. It's no real telling, not financial advice, any of that kind of stuff. But they have a record now. Let's go back a little further. So you can see, even looking back 2 years, and it hasn't been around that long, you can see this only goes back to May 2022. But even at the highest, before the pandemic and all that, they were still only at $50. So there's very little reason for me to believe they can't get back there again. So anything that I bought in at, like, I think $44 or so, I'm going to be making money. Now let's go to the dividend, which is one of the main reasons I got into this one. And funny enough, when I bought this, I thought I was buying JEPB. I didn't even realize there was two, but I'm happy for what I did. So anyway, you can see here they are estimating to have about a 12% yearly dividend, which is pretty good. Once again, most stocks you get are going to be 2 to 3%. This is 12%. They're still giving you growth on top of everything. And this one is a monthly one. So if you had bills or something like that, this is one that you can actually expect. The one problem, it's not really a problem, is the amount's going to change because of the type of fund it is. A lot of it's going to depend on the market and the volatility. So you can see some months you're going to have 45 cents, some you're going to have 35 cents. It could go to 50, it could go to 20. It's all going to vary just depending on what's going on with the market. So if you are actually relying on this as, like, let's say to pay the light bill or something like that, that's something you're going to have to take into consideration, because some months it's going to be more than what you need, and some months it's not going to be enough. So that's one thing to look at. Now, so this video isn't too long. Let's go ahead and just look at the overall portfolio as it is right now before I do anything with that extra money. So let's go to dividend view. And let's go straight to the bottom real quick. Let's start out. So the account total shows $1,617.56. That is the estimated annual income based off of my portfolio as it is. Once again, doesn't include the money that I just got. That's just sitting in cash. That's not getting any type of dividends, anything like that. So that's what we're looking at. Now, the number may be a little bit lower than that, or it could be a little bit higher. Let me tell you why. For some reason, and I don't really know why, Fidelity on a few of these, like this one, for example, is showing a dividends date of 2022, something that's in the past. Even the pay date is also something in the past. And it's calculating that into the number. And this just happens to be 45 cents. But there's a few in here that are kind of like that, where the dates in the past, like nothing's actually going to happen. Even like a little bit lower here, there's another 2020, uh, March 2023. This is just stuff where there's nothing there, and it's trying to calculate that number in there. Nothing on here is that drastic, but that could make it a little lower. On the flip side, because I am dripping back into the account, these numbers should go up. So this is going to be kind of the benchmark, right? We got 16, 17. If you have an account with about $7,000 in there, you can expect 1,617, depending on your mix of stocks. Once again, kind of check out some of these yields. What we're talking about, TSLY leading the pack here, 54%. Like I said, it's about 60 to 70 is kind of what it's averaging. Some months are a little lower, some months are a little higher. Medical Properties Trust, 12.73. Delicious. QYLD, which I didn't talk about very much because I don't only have 2 shares currently, another 12%. Like I said, QYLD is similar to JEPB. If you've heard of JEPB, you've probably heard of QYLD. They're very similar in what they do. I got a couple in here that are in the double digits. I'm trying to do this as a dividend income type thing, so I don't like doing stuff that's like 1 and 2% too much. I'm trying to do things that are a little bit higher, mainly so we can grow the account. At the end of the day, once I get the account big enough, I will probably swap to some of these slower, lower income things that are considered a little safer. But at the end of the day, if the fund's designed to spit out these higher dividends, generally speaking, it's just as safe as the other ones. But you got to be careful and make sure you don't fall into any traps. Medical Properties Trust could be a trap for me. It absolutely could. If the lawsuit goes off, and it becomes a big problem, if that customer still chooses not to pay, there's a chance that sentiment in Medical Properties Trust could drop, and that could drop the stock price. They have the money to keep paying. They're making enough money, but it is a little bit of a risk. So that's my one warning to you guys. But anyway, we're gonna stop the video here. I just wanted to kind of show what a $7,000 account could get you, and just once again to kind of circle back to this, about $1,617, depending on how you have it broken out. So in this scenario, you could basically double your account in about 6 years, 5 or 6 years. One thing, I'm not going to really go into any detail, but if you are buying stocks of shares of 100, and it's not every single stock, but a lot of them, if you click it, you have to activate it on your account, but you can go to your options chain. If you can do things like that, you can also multiply how fast you're getting a share. So, for example, um, and I'll stop after this. Tesla, or Tesla, right? You need 16 $1.83, right? That's a price of a share. So if you're getting a certain amount of dividends, you may be able to buy another share, right? But you're going to need a certain chunk of them to get there. If you're doing options, you could very well do one option a week and get enough to buy one share a week. It is possible. You know what I'm saying? So you can basically double down, use the dividends to drip back in. You can do options to drip back in, and quadruple basically your account in that same amount of time of you just kind of sitting there and letting it add up. So it's one of those things I would kind of say to look into. You don't have to, but at the end of the day, this is what I wanted to do. So in the section below, in the description, put down what stock you think I should buy with the $6,000. So I got $6,000, almost $7,000, and I need to invest it somewhere. I could double down on medical properties trust. What I kind of want to do is double down on the TSLY and fully go in and see what happens. SoFi is another stock I don't currently have that's making its rounds that may be worth looking into. Or I could put it into something like a SCHD or JEPQ. I could put more into that. Not really sure what I want to do, but I'll go ahead and see if you guys have any updates or any other stocks you think I should look into, and we'll go from there. Once again, if you like the video, if you like the at least the idea of the video, or want me to change up some stuff, put a comment below. Like, comment, subscribe, all that good stuff. I definitely appreciate it. Appreciate the people that have followed me, that have subscribed. I know I don't know if anybody even likes these videos, but I definitely appreciate it. I like spending a little bit of time trying to share what I'm going through, and hopefully it's something that can help you. Because like I said, I hate sometimes watching all these videos on portfolios, and it's like, look at my 40K portfolio, look at my 100K portfolio, look at my 200K. Here's if you had $1 million portfolio. Look at all the dividends you can get. It's like those things are so out of control. Like it will take forever to get there, to really get there. To even get to the point they're talking about. But this $7,000 portfolio, I feel like this is realistic. This took me approximately, I want to say 4 years between me kind of just putting some money in, between me starting to drip in and just buying stocks from my job and getting the discounts and all that kind of stuff, and then selling them and changing them to what I wanted it to be. It really took about 3 to 4 years. So this is very possible for just about anybody. So anyway, we'll stop it right there. I want to thank you guys once again for watching. In case you didn't know, I's a hobo.